Good evening, everybody, and welcome. Welcome back to Live Market Analysis in 2025. It's such a pleasure to be joining you again Monday evenings to talk about markets. I wonder if really much has changed since our last discussion when we left in December. Markets weren't doing so well today. Not so well also, but in between, it was a pretty good January. Was it there? Look, we'll talk about markets in a second. Before we do, it is important. I know you know how it works, but it is important we talk about the disclaimer, which says that everything we're going to discuss tonight and for the rest of 2025 is general information only. It hasn't taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it very carefully against your own personal financial circumstances, objectives, and take all reasonable steps to fully understand the possible outcomes of any trading strategies that I might discuss with you. It's always recommended you seek independent financial advice to ensure that any of these strategies are appropriate for your financial situation. Trading and investing is risky. That's the important bit. You will endure losses. Not you might endure losses. You 100% absolutely will take losses at some stage. Ultimately, it's you, not I, is responsible for everything you do. Hopefully, I can help you, though, take smaller losses and fewer losses and plenty of winners as well. Other than that, it's over to you. We're going to, same drill as last year, same format. You ask the questions, I provide the answers. It could be anything about Aussie stocks, US stocks, or any stocks really from any market, currencies, crypto, bonds. We love to talk about bonds, commodities, of course, commodities, or it could be just about trading. The 3 M's, as I call them, the methodology. That's how you get in, how you get out. The money management, how much you get in when you get in, and how much you get out. And of course, the mindset, how disciplined you are doing all of those things. Let's head over to the Amy broker screen then. Actually, before I do, housekeeping, a couple of housekeeping items. We'll start here. This is the YouTube page which I've set up for this. That's me. I think it's just called, there you go, maybe you can see that, at Carl Capolingua _ YouTube. And what I've done that I haven't done in the past is I've created a playlist called Live Market Analysis Webinars. If you get to my page, if I go view my channel, I'm pretty sure you're going to see something similar to this. You've all the videos are there now. You up to this point, you haven't been able to access them in one spot because you need the individual email I send you each week, because they're always private videos. They're going to be private videos for a week each time. With a week's delay, I'll then make them public and put them up here. I think it's important we have a week's delay, because if they go public to the world, everybody gets the benefit of my analysis immediately and everybody can act upon it. And I don't think that's fair to you, faithful, who have been with me from the start. And I think you deserve to have first, go at that information. So I'll wait a week to make each previous webinar public, but I do know, and I keep getting requests from people saying, Carl, is there an archive? Can I go back to whichever video? I want to look at that one. I say, well, you can. You just need to find the email I sent you that night. And they go, oh, Carl, I deleted my emails. I don't have them anymore. I say, okay, well, they're here now. There's the archive. You can go back to all the videos that we've done up to this point, and the playlist is also another way to do that, because if you go play all, they happen in chronological order. So that's the first point of housekeeping. Hopefully that helps a few people. The other one is just a reminder that I'll make this a separate playlist as well, that there is a live market analysis trading view functionality tutorial. So for people who want to understand how to put the trend ribbons that I provide for you on their trading view charts, and also how to access these trading view watch lists of my chart watch ASX scans shortlist that I do each day via market index, and instead of taking those lists or doing all of that work yourself, you could as simply as look at the uptrends that I shortlist for you each day and just go on those. These are the ones for tomorrow, so many of you already have access to this. I update them around about 4 or 5 o'clock my time each afternoon, and then we're probably going to go through many of these today, so I won't go through the whole list. And there's uptrends and there's downtrends as well. And I say this because we've always got new people coming on board, and maybe some people didn't know that this functionality existed. If you don't have a Trading View subscription, hey, that's up to you whether you do it. But if you do, there is a referral code which I'll send you in tonight's email that you can use, and we both get $15. In theory to use, but not on sales. I found out when the Black Friday sale came up. You probably found out about it if you did use my referral code and you tried to use your $15. You can't use it on sales anyway. So whatever. So those are the two key points of housekeeping today. While we're here, let's go to Market Watch. Because I like to come here because I click on, no, not that, get rid of that. But I like to click on futures and I see what the futures are doing. And we're down about 1.7% on the Nasdaq futures. You can see here 1.5% on the S&P 500 futures. But we're skipping ahead. We need to talk about portfolio management before we go any further. I better read some of your messages before I do go any further. Avant saying, hello everyone, hope everyone had a great holidays. Thank you, Avant, I hope you had a great holidays as well. Adonis saying, hi Carl, thoughts on the following stocks? We'll do US stocks down the track, certainly. Adonis, can you please, yes, I'll look into those. Avant, welcome back, thanks King. I'll look at those. Scratch, COF, LOL, I think that's also something I need to look at. Welcome back. Michael saying he missed me. I missed you too, Michael. Hi, Carl. Yes, I can look at those. Sounds great. Love your work. Pleasure, Michael. Hi, Carl. Welcome back. And okay, good. I'm all caught up. Hey, let's have a look at this now. This is the portfolio management model. And what did we leave on? I think we left it 1/3. I'd have to go back to the YouTube playlist and check it. I'm pretty sure we left it not 1/3 risk. 2/3 risk, 1/3 off, okay? Well, I can check. I mean, it was December sometime around here, 13, 14, yeah, look, probably, or was it Christmas Eve? So somewhere around here, we'd had the big black candle. We knocked off 1/3, no doubt about it, after that big black candle. Not sure if we did anything since then, to be honest. And that, I think, was the right place to be. Roughly 2/3 invested, 1/3 in cash. Of your 2/3 invested, I still think, you know, you're going to skew some towards the short side there, not much. Of that 2/3, I don't know, I'm not good with fractions, maybe, you know, a third of that in shorts and 2/3 of what you had in longs because of obviously the market conditions, maybe a few more longs, maybe that's too many shorts. But just having, you know, just a couple of strategic shorts in the portfolio. And fast forward, you know, just this zigzag pattern of frustration really within a fairly well-defined trading range, I think, between the 22.05 high and the 18.598 low. And last night, there we are, the Trump tariffs, which baffles me, everybody, because we knew about these tariffs. We knew about 10% for China. We knew about 25% for Canada and Mexico. He told us they were coming several times, and then he delivered them, and then the market crapped itself. It's like, well, come on, everybody. I think we could, you know, be a little bit more mature than that. Having said that, not a huge impact here on the Nasdaq Composite, which is, you know, ultimately one of the key risk-on gauges of US stocks. Let's go to the Russell 2000. Wow, I didn't look at this chart today, and you can see a few of the lines a bit skewed because I haven't updated it for ages. I haven't looked at it probably since December when we looked at it last. Hardly any response there from the heart of corporate America tells you the order of magnitude of how much US investors are concerned about those Trump tariffs. And I'm going to say, look, a little bit, but not very much. And overall, the short-term trend is still up. Long-term trend is definitely up. That's that giant, big, dark green trend ribbon there. So putting it all together, I'm not too worried. Yes, there's a supply-side candle. Yes, there's an upward pointing shadow. But as I said in my market index chart watch today, hopefully you're enjoying chart watch. Comes out every day. If we're only here on Mondays, you still get my witty repartee 5 nights a week. And you're all seasoned, you know, die-hard, long-suffering, you know, endurers of my technical analysis. But there are a few on Market Watch that I can tell you aren't as used to it and a little bit confounded, befuddled by some of the stuff I write. But the gist of what I write is trend following. We're going to follow the trend there. Still, I think, at 1/3 off and waiting for the next move. The next move is either to break through 2205. It's very simple. Go test the supply up there. That's the top of that upward pointing shadow. We expect there to be supply there. Nothing unusual is happening here, ladies and gentlemen. So we're going to stay the course. Up there, we'll go to a full risk position. FRP, full risk position, if you didn't know what that means we're fully invested. We've got all of our cash working in the market. Oh, but Carl, shouldn't we keep some powder dry? No, because the market's going gangbusters. You want to be all in. You want to make hay while the sun's shining, because it ain't always shining. When it stops shining, that's when we'll get the money out. So no, full risk position is just that. And then I think if we're going to close, say, beneath 18,598, then we would knock another third off, but I'm reserving the right to knock another third off. Before that, if we saw a confirmation of last night's candle, so another big black candle upward pointing shadow, lower to this one, lower peak, taking out of 19,204, maybe I'll go there as well, but happy to stay the course. We've looked at the Russell, no red flags there, that's important. Let's head over to Australia and do the local one. I think in my email yesterday, that was before today's candle, before the Trump news, I said something like, hey, we're back in 2025, full risk position on our webinars as we are in the market. And I was referring to this chart here because really based upon Friday's close, I do believe you would have moved to FRP based upon a record high close and a record high point. Was it the perfect candle on Friday? And maybe some of the funds were selling into the new high, which, it happens, or some of them were kind of front running what they thought might have happened today. Today's big black candle cannot be ignored. It is big. It is relative to the last say 4 to 6 weeks before, and that's all you really need to go back with candles. It's a very full candle. There's a small downward pointing shadow coming in at a very logical place, and that is the dynamic demand that we would expect to see at the short-term uptrend ribbon and 83.66 as well. So all still making sense. But that candle, if he said, hey, Carl, draw 20 candles that could occur after the Friday one, it might be the 19th or the 20th that I would have drawn that one because, I felt we would have done better than that today, especially considering the Nasdaq and the Russell really didn't respond. So basically the world is saying what has occurred, we're going to get hit harder, relatively speaking, than America is. Anyway, that's our lot in life, isn't it, ladies and gentlemen? What are we here? FRP or 1/3? Look, if you hadn't gone to FRP, stay at 1/3. If you have gone to FRP, I think stay there. I think stay there for now. And again, we're looking for confirmation. The supply side event in itself is depending on how big it is, and that's not big enough to warrant acting, because you can get a supply side event that's so big you have to act straight away, right? It takes out points of demand, it takes out long-term trend ribbons. It's just massive. And we've seen those. We know big black candles. We call them species-ending events. I don't think that's a species-ending event. So when you have these less than species-ending events in themselves, I think they're pretty boring. I think they're a little bit mundane. It starts to get exciting when you see confirmation of that, and that's when we need to act. And I don't think we need to act now. We just need to be alert, not alarmed. Also wrote that in tonight's update. Okay, let's have a bit of a whip around the grounds and see if there's anything in the charts to push us off I keep saying 1/3, 2/3 risk in the US and potentially FRP in Australia. We said the Russell wasn't a reason to do it. I'm going to look at, I'm curious, mid caps. You look at bigs, you look at smalls. Let's look at the mids, and not perfect. Not a perfect display of demand side control, is it? But still fine. No red flag there. In France, hey, make France great again. Last time we looked at these, I think Europe was in a bit of trouble with Trump coming in, the initial, feeling. But since then, they've had the most amazing January. Euro Stocks 50 showing that also. So DAX is fine. Holy moly, look at the FTSE. FTSE's fine. Of course, they don't have today's candle, which will respond to those Trump tariffs, and Spain looking very, very good also. Hong Kong, I'm pretty sure, is trading. In fact, the last day there is the 28th, so it's not trading for Chinese New Year, of course. I thought maybe Hong Kong might have been, but it's not. The Nikkei is trading, and but not today, it seems, because I can't see a candle for today. No red flags is what we're looking for there. Nifty 50, it's not great, but no red flags. And then the markets, which I'm quite certain are on holidays for Chinese New Year, the last we saw of them were pretty flat, but again, no red flags. Looking at ASX sector indices for not so much red flags, but best versus worst sectors up until today, consumer discretionary was looking fantastic, if not the best. Energy was trying to turn the corner. Jury's, I think, is still out on this one, but it looks substantially better than when we looked at it last, really at its lows there in December. So constructive rally there. I wouldn't completely write it off. Financial still looks fine, very much up there with consumer discretionary. Gold looks fine, and I think relatively speaking did quite well today. Some of those great trends that we're trading in gold in ChartWatch, ASX scans doing quite well. Healthcare sector, big drop today, which is baffling for me, because if you look at CSL looks rubbish. So that's maybe ResMed and was FPH until today, maybe Cochlear. Tech okay, middling, still fine. I'm a little bit tuning out today's candle, really, as I just subconsciously, I'm not doing it on purpose. That's technology again. Resources still has problems. Look, I'm prepared to give it the benefit of the doubt for now, but it is still the key sticking point for Aussie stocks. Property middling, no big deal. Staples struggling, but again off its lows. Telecoms fine. Utilities, I wouldn't say species ending event, but not far off it. Those last two candles having some problems, but a sector that is dominated ultimately by two stocks and more recently by Origin Energy. Aussie dollar, is that going to be a problem worth looking at? That's not alive, doesn't have today's candle with the Trump response there. It's 60.80, so well off that what you're seeing there. Good for exporters, bad for importers, I guess, bad for inflation. So that's not ideal. Looking at some of the base metals, heading to a line chart now. These are London Metals Exchange prices as of Friday's close. Probably going to open down a little tonight. Aluminium, it looks half decent. I wouldn't complain about that at all. Copper going nowhere, very fast, not great. We'll look at iron ore elsewhere in a second. Nickel still looks terrible. Lead looks terrible. Tin looks middling at best. And zinc has broken down. That looks pretty terrible now also. Lithium carbonate hasn't traded for a week due to Chinese New Year holidays. But bouncing around the bottom, and I don't expect much else from lithium over the next few weeks just based upon those trends. But I would say at least it has potentially stopped going down. Let's head over to the ChartWatch, not the ChartWatch, the Trading View screen now. We'll start off with our bonds. We'll go to commodities, and we'll look at silver first up, which is trying to pick itself off the canvas of that long-term uptrend ribbon. Looks okay. Not getting too excited about it. Certainly, gold looks far better, and silver is gold's poor cousin at this point in time in this rally. Gold itself, I think, still looks fine. There's nothing in that gold chart to suggest that we shouldn't stick with some of these trends and extrapolating that back out to either the gold ETF ticker code on the ASX GOLD, which has been in my ChartWatch scans many, many times, or any of those gold stocks that are still frequenting those lists. Copper, as we said, middling, but not great in my opinion. Iron ore, middling, not terrible in my opinion. Uranium still very much set in the downtrend there. Can't see that turning anytime soon. Watch out for my interview with Duncan Craib from Boss Energy. Went and had a chat with him on Friday. That should be up on the site tomorrow, and he's got some very strong opinions about uranium. Why don't you guess whether he's bullish or bearish? Natural gas had a decent pop last night. Had a pop before that. This is all tariff related. This is 100% tariff related here because it's got to... Natural gas prices in the US have to go up because there's going to be less cheap supply around. They're going to have to find supply from elsewhere that might not be as economical, and ultimately consumers will pay the price for Trump's policies. But hey, they love him anyway, so I guess they'll forgive him that. Crude oil again, and Brent got a little bit of a pop on last night. Still roughly short-term uptrend on those. Coal contracts. Very much in the doldrums there on thermal coal. I read a research report today saying that we're summer here, so they must be winter there. It was unseasonably warm in wintertime in China, and that is what's hurting thermal coal prices. Let us quickly finish off this whip around the grounds with a look at the most important markets, and that is the price of money market. And we're going to look at US 10s first of all. Initially down on that Trump news. That's pretty stock standard, a little bit of flight to safety. Flight to safety means buy bonds. Bonds are stable. Uncle Sam, you can always rely on Uncle Sam to pay his debts. And therefore, if we're a bit nervous, we might sell some risk assets, that is stocks, commodities, crypto, and we might buy some bonds. And when we buy bonds, we push up the price of bonds, which then pushes down their yield because of the inverse relationship between bond price and bond yield. So initial response, as you can see from that downward pointing shadow on the last candle, your eye should be tuned to these things now. You should go, ooh, downward pointing shadow on the bond yield chart means they bought bonds in the morning and then now they're selling bonds, or they're backing out of some of those positions. And that's kind of good as well in that there's less risk aversion around. Having said that, we don't want to see bond yields go back up because that would be bad for stocks. This is what killed us in December. This is what killed us in December, and this is what saved us in January. So ladies and gentlemen, make no mistakes, these charts are the most important charts for your stocks. Interesting charts in Japan. They keep climbing high because we are expecting higher rates from the Japanese central bank. It hasn't seemed to cause the huge ruckus that was caused in August, so that's a good thing. And then we'll just have a quick look at the Aussie ones, looking very similar to US. You can see actually that risk aversion is greater here, as in we haven't seen the rally back up to the top of that candle. So another example of where there is greater risk aversion in Australia than there is in the US. Make of all of that what you will as we head back to the Amy Broker chart and start to do some of your requests for this evening. We're going to kick off with Shambu, who hit me up on Twitter asking about EZL, which doesn't ring a bell, but it looks good. Euroz, Hartleys, a stockbroker there. I don't know if I'm a buyer of stockbrokers. I read their research every day. But I guess, look, you don't need to be right, do you, to make money by getting people to trade. But that looks fine. So putting aside what they do, because they do other things, of course, they raise capital and give you the most incredible access, unprecedented access to capital markets, and only the best deals that they have for you, ladies and gentlemen, like all brokers. They do other stuff like that. Now, looks great. Short-term trend is up. Long-term trend is not down. Okay, and my scans, when I do these scans for you, that's one of the criteria, that the short-term trend isn't down. It doesn't have to be up because we have these type 2 trades, or these, we call them our turnaround setups, obviously where, as the name suggests, there was a long-term downtrend, but that's transitioning to a long-term uptrend. So the amber here is good enough for me. As long as that's green, it's got some steepness to it, it's expanding, which it is. And then once we've done our trend analysis, which is tick. In fact, the other thing with trend analysis is we should see a tendency for the ribbons to be offering dynamic demand now, not dynamic supply, and I think that's the case. This is more of a supply, so well, even over here it's all supply, and then here it worked its way into demand. And give me a thumbs up, ladies and gentlemen, if your eyes, you just see stuff like that, you just know now. Like it could be the crappiest stock forever, and you just see this thing now and you just know, yeah, we're this thing, I don't know what this is, so it's back. It's like I can look at it now. There you go. Like, we're starting to figure that out, that we don't need to worry about any of this crap all through here, right? It's irrelevant what it does. It's irrelevant what news is coming out. It's irrelevant what your friend told you at the pub the other night. You know that all you need to do is say, yep, thank you very much for the information, but I'm just going to wait until I see this stuff here. And it's doing that stuff. So once we do our we've got our trend ribbons in the right place, what we're going to do is look at our price action, and we want to see our return to rising peaks and rising troughs, but not just rising peaks and rising troughs like you see there. In fact, those look very good. We want to see the rising peaks and rising troughs where the last trough, okay, and let's call this one here, for example, the last trough is at or above the second last P, and I'll just write P because for peak, obviously, that's your peak 1, and that's obviously your peak 2 there, and any separation you can have between those, for example, there and there is a bonus. And what we're seeing here is we're seeing long and extended motive phases, motive mean moving, and then very shallow pullback or stagnation or reaction phases. We're just seeing lots of excess demand with very small, weak supply side reactions, where the demand side is actually very strong, still soaking up any supply that comes into the market. That is what I call good price action. The price action we'd prefer not to see. Doesn't mean it's bad, it's just how we differentiate between two trades. And if we look, this is the irony of it, okay? Let's say we had setup 1 over here. You will see the irony in the second, I promise you. There's setup 1, there's setup 2, setup 2. And let's say this is now, let's do a little arrow. So that's now, and that's now, imagine. And we're choosing between setup 1 and setup 2. And we're saying, well, which one's the better trade? Is it fair to say they've both moved the same distance in the same time, give or take? Let's assume they have, right? So in terms of total demand or total excess demand, they're very similar. But it's the style. I think style is substance here. It's confidence. It's setup 2 is giving us so much more confidence of who's in control. In both scenarios, we would say the demand side is in control, but in setup 2, it's the degree of control is so much better. So that's why we like that. And then the final flourish. It's the first setup, everybody. Don't worry, I won't take this long for all of them, but I do want to re-establish some of our core principles: trend ribbons, dynamic demand, price action, good price action, and finally candles. We don't see a predominance of white candles. They're the ones with white bodies and or downward pointing shadows. They are an indication of very short-term, day-to-day excess demand. And those words keep peppering my analysis: excess demand, demand-side control. That's what it's all about. We are going to enter the market when we see or we perceive. But that's all it is. It's our perception. It's not reality. You have to remember that what we perceive is completely irrelevant to the rest of the world. Our perception is there is demand side control, and that then allows us as disciplined traders to enter the market. Without that, we will not. So long story short for you, Shambu, this is a picture of demand side control, and therefore it gets my risk. And that's all I'm trying to work out. Does this or does this not get my risk? And yes, it does, plus 1/3 risk position for me. If I didn't have it, if I did have it, I'm still plus 1/3, but I'm adding to an existing position. Happy to. Let us move on to the next offline request, which is from Mick, IMR, which is Imricor. Some problems today. Look, it's one that's been in the lists quite frequently and quite early. I'm pretty sure the first. You can probably correct me if I'm wrong, but I'm pretty sure that's the first day it went in because I know what my setups are. So if you've got it, you've probably done well. You might have taken some profits. I think probably not on that day because it smashed through $1, and there's really no need to do the round number if you didn't set it up in advance. If you did, then you got some out. Maybe on that day there you did some round number work. Probably adding back in here, or probably adding there. Maybe not on that day, just with the upper shadow and proximity to 150. Probably adding a little bit there. Again, probably adding a bit there. Maybe not with the upper shadow. Up to you. Just showing you where how the model works. And to date, clearly not adding. So the first thing we can say about Imricor is that we're not adding any risk to this. Certainly we would have risk up to this point. So therefore the question, okay, for new traders, no risk being added. For existing traders, how do we handle it? Because we've got a supply side event today, don't we? A full black candle, decent size compared to recent candles, closing very near the low. Is it enough to panic out of this one? Is it enough to manage our risk? And really we're just talking about, it's not species ending, so by definition, therefore, we're just talking about, are we going to take 1/3 off the table? I don't think you need to. I mean, it's not great. I'd love to not have to make this decision. I don't always have all the answers. That's the other thing. Sorry if you thought I'm any more decisive in 2025 than I was in 2024. I apologise, but I'm seeing this like you. I mean, I'm just a human, and I know what I know, and I've got to make a call. But I still think and I'll tell you why, I still think this is all still pretty good. This is the first real supply side event because these are all good. That's a good candle. These are all good candles here. So we've got a bad candle. Let's put this into perspective. We've got a bad candle on a bad day. So I don't think we need to panic. So I'm going to go, I'll tell you what I'll do, and then I'll say, well, I'll cover my ass a bit and say what you can do. I'm going to say no, I'm going to say full risk position, I'm going to stick with it. I don't want to see confirmation of today, so maybe tomorrow's the day. Remember what I said, that the supply events in themselves are a little bit boring. It's whether they're confirmed or not, that's when we need to do something. So I'm going to hang in there. If you're doing really well on it and you just want to take some risk off the table, in line with just having less risk at the moment, then all we're doing is talking about a third. It's not the end of the world, is it? Let's move on to OCC, which I was going to say I suspect is in a similar boat. I know it's one that's done extremely well. I know from messages that many of you are on it. That makes me feel very good. And you haven't really had much reason to do anything but stick with it up until this point. I mean, this here is the worst candle on that chart, to be honest, and it's not even that bad. Maybe if you panicked and you flinched and you did a third there, but even then it's probably pushing it a bit. But otherwise it looks fine. I mean, that's even an add position there. Even there's an add position. Today's probably a bit disappointing, but again, I'm going to go with the last one and say I don't think we need to do anything. We've got a bad candle on a bad day, and otherwise everything's still pretty good. We do have a lower peak here, and I'll just show it to you if you're not sure. So that, and that. Today's a lower high and a lower low, so there is a lower peak in play. But it's so shallow. Again, I'm going to go full risk position and not throw the baby out with the bathwater at this time. And watching very closely for tomorrow's candle. Another big black candle. I might change my mind, but I think we're still okay here. Let's just stay the course. And thank goodness I didn't have to make one of those line ball calls for a third time in a row, because this one's very easy for me. Mick, there's nothing to do here, nothing to see. Full risk position, no reason to do anything else, because today's candle is wonderful compared to all of the other ones we've seen so far. So let us, if it lets me do right on there FRP. Thank you, Mick, for your 3. Let's go to Davis, who's got CAY, which, again, I was going to say, I suspect, similar candle, and we can say that for every stock today. But this is actually not a bad candle at all. And this hasn't given you really much reason to do anything, but hang on here. FRP, we've looked at it just before Christmas. FRP. Let's just go copy and paste, I guess. We're not going to add any risk today because I don't think the candle warrants it. It's not a bad candle at all, but it's just not good enough, I think, to add risk. If it was a white candle with a high close, then it would be plus 1/3. But FRP on this one, if you're not on it, what do? Well, I didn't write plus 1/3, so that means I don't think it's sufficient to add risk at this stage if you're not on it. If you are on it, happy to stick with what we've got. Somebody might have their mic on. If you can do me a favour, turn that off until I make a big mistake, then turn it on and shout at me, please, and thank you. Let's go to Sanjeev, who's got CAT, which, again, I'm so glad that I don't have to, flip and flop about, because today's candle is nowhere near enough for us to do anything but continue to run FRP on this one. And again, for those who don't have it, everything looks fantastic here. It is one of the most amazing charts you're ever going to see. You can see all the FRPs all throughout here, nothing but hold for this one for such a long period of time, and we're going to say that today, but I'm not adding risk today because the candle doesn't warrant it. We want to see a nice white candle with all that other wonderful stuff going on. Let's go to NEU. These are for Sanjeev. I think I might have said that. Maybe Sanjeev is looking at this one more for a turnaround play, or maybe Sanjeev is looking at this one for a short. I don't know, he didn't say. But it's certainly not a long, because remember what I said about my long scan. I need to see a short-term uptrend, yes, but I need to not see a long-term downtrend. And what have I got here? I've got a long-term downtrend. So 100% rules it out for a long. I can't even consider it. I'd keep moving for long, skip, wouldn't even spend more than 1 second on this. Oh, but Carl, Neuren Pharmaceuticals, they've got the most incredible product. Let me tell you about their product. It does ... because I've already walked away. I'm off in the corner playing Tetris on my phone. I love Tetris. Because I have no interest in what you have to tell me about this stock, because it's got a red ribbon over there. So I'm going to keep moving. It's not setting up for a short either, because it's got a green ribbon too. So if it's not setting up for a short or a long, why the hell are you looking at it? Like, you can't trade it. If you're following the rules, you can't trade it anyway. Oh, but it's just interesting. What? There are plenty more interesting things in life. Let's have a look at Polymetals. POL has done really well. I think a buck might be a bridge too far for this one. If you had it, you probably would have taken a little bit off the table at $1 for no other reason, but it's a big round number. First time there, I suspect. But look at these up shadows since we got there. Obviously, we had some supply come in at $1. None of you are surprised by that now, right? You all know exactly how that works. But upper shadow here, upper shadow here, upper shadow here, just a lack of impetus to maintain that upward momentum. Supply side having a little bit more impact on price. Look, that one's still good. There's still demand. It's just, what do you get? What do you get when you've got excess demand that starts to meet increased supply? Just economics 101. Excess demand for a period. Supply starts to increase, or demand just drops back a little bit because of the $1, and you reach equilibrium. Demand and supply are equal, prices go sideways. Two things can happen after that. Obviously, demand side takes control and you burst through $1 and you never look back, or the supply side takes control and you roll over from here and you get back to 25 cents and you're going, geez, why didn't I get out at $1? Today's candle is a bad candle on a bad day. And if it was as good as many of the other ones we've seen, I'd probably give it the benefit of the doubt. I just think because this one is a bit more sideways, I just want to delete those because I want to just do a bit more work here, okay? Because it's going a bit more sideways, I think we need to be a bit more cautious on it. And if you're not sure what I mean, we've got a little bit of a inkling. Let me change that colour so you can see it a bit better. Let me go to a red. So if we go here, why is this not drawing the next one? We've got a bit of a lower peak forming, so off this level here, and with today's candle and with its proximity to the trough that sits between those peaks, we're potentially going to have a little bit of a problem if we're close beneath it, moving into lower peaks, lower troughs, so that the price action confirming that short-term supply side control has occurred. So I think another black candle, I'll give you, it's two options, it's always up to you, but you could either knock a third tomorrow and say, look, just not interested in having too much risk at the moment. I just want to, just going to get some off the table, toot sweet. And then you might do a second third if you were to see a candle that looks something like this. And of the ones we've seen so far today, I think this is the one that's most likely to deliver you a candle that looks something like that. So it doesn't have to be that big, really. I mean, it could be just anything that's sort of full and black. Could be that small. And so let me get the one I want, that one. So let's put that 1/3 on there, and then we'll copy and paste that, and you could do that. So you could do a third tomorrow on the open, and then if you got that candle by the close, do another third. If you want to be a bit conservative, just don't do that third and wait for the confirming candle, because it might not come. Okay, I'm going to go a third tomorrow on this one. And that's what we're talking about. It's not wholesale getting out, because I don't think it deserves it yet. But once it turns and breaks, we'll get out really quick. Okay, so we'll give it a good chance. Then we'll take a bit off, and then we'll get out really quickly if it doesn't look like it's going to rebound. So benefit of the doubt, and then wholesale out of there. QPM, that was looking really good. No real round numbers at play there. The nearest one is 10. Not sure what happened on this day here. Some of you will probably say, oh, there was an announcement or whatever, but that's pretty close to a species-eating event, isn't it? Because it's probably twice as big as any other candle, white or black, in the entire run. And that's how you know you're getting more towards a species-eating event than just a run-of-the-mill supply-side candle like we've seen so many times. Very, very close to the low, not quite, but still, for the most part, full black. So that's the big concern. And today's candle goes a long way to confirming it. I know there's a little bit of a lower shadow, but I just think too much damage done here. And by that, I mean that look, on the way up, it's here we go, 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 here we go. Everybody loves it. Everybody's talking about. Chat rooms are just awash with how good this thing. Here we go, here we go. It's going to $1 million. And then you see this, and it's like, oh, maybe no, we don't. And people are caught in it. They're going, geez, I knew I should have got out at 7.8 cents. I knew that was it. I saw that big seller come in, and I knew I should have sold it, but I thought, oh no, it's still, the trend's still good or whatever, but I knew I should have done it. And they're going to be, it's not just you thinking like that, it's a bunch of other people thinking like that. And what that's going to do is just create what we call latent demand in the system, latent supply in the system. People who have changed their mind about this stock and who now view rallies as opportunities to sell, right? Before, rallies were drawing people in, FOMOing people in to buy, yes or no? Think about it. Up to this point, rallies were FOMOing people in to buy. Pullbacks were opportunities to buy the dip. Now, after the way this has changed the market's thinking, because we have feelings, now we're thinking sell the rally. And that's how trends change, ladies and gentlemen. And it starts with big moves like this, because before that big move, we were confident. After this big move, now we've got doubt. So I think 1/3 at least immediately, and this is what I would do. You guys can do whatever the hell it is you want, just to knock some risk off the table. And then now again, I keep saying this tonight, maybe that's tonight's theme. I like to have a theme every night. It's all about confirmation, isn't it? And it kind of befits tonight, isn't it? Because we've got all these bloody big black candles. Tonight's theme is it's all about confirmation. We get that confirmation, then we're going to start to get out much quicker than just 1/3. But I think 1/3 here as a precautionary measure. That's QPM. Let's go to MME, which I won't because we've done it already. Just as a reminder, it's that one there. Thank goodness, didn't have to talk about that very long. And JLG, which I can only assume that Bernard is asking about a short here. It's unequivocal. There's no way Bernard could be asking about a long, and this has been in my feature charts as a short so many times. So yes, Bernard, I think as a short it still looks fantastic, and if this is the one stock that you're shorting to just give you a bit of protection on your longs, then more power to you, because I think that looks very good, and I'm pretty sure if we look at my short list today, it's on the short list. Other shorts, if you're interested, because it's kind of the topic for today, which I think still look great, and they're looking at this list. I don't think there's a single one on there that's appearing on this list for the first time. If anything, they've been in my chart watch scans this double digits of times. So you could have shorted them any time over the last few months. Maybe not that one. There you go. That's the first time that's on the list. Or I stand corrected. But certainly CTT's been there for a long time. Look at that exit short. There you go. That was very clever, wasn't it? Short, because I had shorts through here. And for this big gap, exit short here. Yeah, take a break. And it's been appearing in the list, I reckon, from that candle there. It's been appearing again. This one is fairly recent. I actually put this in quite early. This is the species ending event. We talked about getting out through here, I reckon. I can't remember, is that candle? I reckon it's that candle. Go check the tapes, as they say. I'm pretty sure it's that candle. I've nailed. I don't know if you've noticed. Give me a thumbs up if you have. But much like the turnaround setups to the upside, this works so well to the downside. Give me a thumbs up if you've noticed, because maybe some of you aren't noticing how powerful this methodology is for shorts. I reckon it's even more effective for shorts. I'm going to give you a few thumbs up here. And it's frustrating because many of you probably have never taken a short trade in your life because, I haven't got around to it. I know you know what it is because I've explained it to you, but never got around to it. But ladies and gentlemen, the system works so well. There's so many thumbs up. I don't know if you can see them, but it's so good. And I've made some incredible calls on stocks that were just market darlings. Now, that one there, CUV, speaks for itself. This one's Domino's. I've got a bit of a vendetta against Domino's. It's one of the most featured, as is Endeavour. Oh, but Carl, it's got a great dividend yield. Okay. Firefly, that's a new one today. IPH, Johns Lyng. You can't short sell all of them. I know in your CFDs, but check most of them. The vast majority you can. Meteorite Resources, Mineral Resources there. Nickel Mines, anyway, you can see the list. In fact, you can do the list yourself in TradingView. But just tuning your eye into some of these charts, and I like to think, it's not that difficult, really, is it? When you know what you're looking for. So, Bernard, on JLG, stay the course, FRP. If you don't have it, not in the FRP, but minus 1/3, as in adding to a short trade. Going to go to Craig. Craig's got James Hardie. using the cough button there, James Hardie, which is one that if I've nailed a few calls, I reckon this is one of the ones that I've called the worst. I've been the most wrong on, I reckon, over the last 12 months, and you can see why. It's shown some great setups for shorts, not the least here. I'm pretty sure I ran it as a featured short right here because it completely broke down, ironically, on the setup I just showed you. And then I think I ran it here as a long, and I'm not sure if I've run it since then, to be honest. So both of those would have been almost exactly the worst places you could have traded. And all it's done is chop and churn around here, which makes me wonder why Craig's even asking about it, because there is no trend there at all. And once bitten, twice shy, third time, you ain't going to trick me, James Hardie. I have no opinion on that chart. There's no trend, so I have no opinion. How can I have an opinion if there's no trend? A for N. Much the same, actually. I reckon I've had longs and shorts on this as well. I'm looking here and I'm thinking I had a long trade here. I'm pretty sure I would have, and I reckon I would have even put it here on this day. And some of you might have bought it on that day and cursed my name shortly thereafter. I can't see the future, ladies and gentlemen. I'm sorry. I don't think I've run it as a short recently, or maybe I did. I got sucked into it there reluctantly. I look at this and go, oh, I can't make that. And then I go, oh, but what if? And I run it, but no, it's too sideways again to do anything about this one, long or short, Peter. So I'm not sure what you are. You didn't tell me. Vysarn, I've no doubt you're long because it's had a wonderful run. It's been a great trade for us, hopefully for you. And no doubt you would have taken some off the table, Peter, and you're wondering what to do with the rest of it. I think you can stay the course for now. You probably had some nerves on this candle here, but at the same time, very, very happy to see how it closed. And that's why we act upon closing candles, not on intraday candles, because if you looked at that intraday, it would have been a big black candle at some stage. Hopefully you can see that. If it helps, I will draw it on for you, but at some stage, that was a big black candle because it was a wall of excess supply. Might have been some bad news on that day, I don't know. And I've got to make it any better, so it was maybe like that. But then the demand started to come in and it created that little shadow. It stopped trading at the low and a bit more demand came in and the supply backed away. And then before you know it, it was a full-blown rally. And we ended up with this. So I think we're okay. Today's a bad candle on a bad day. Not too stressed out about it. Happy to give it the benefit of the doubt. The point of demand is so far away, it makes it difficult. That's the hardest thing about this one, is that, for it to close beneath that point of demand, I have to give up too much. And I don't want to do that. So, look, I would watch it candle by candle. I certainly don't want to see it push too far into that short-term uptrend ribbon, just because I don't want to give up too much profit, that's all. But happy to stay the course. And the course here is plus 2/3 only. Current risk position equals plus 2/3 because we've taken a third off the table there. Would you have taken another third off? You could argue, you could say, oh, Carl, I did this. And if you were telling me this, Carl, I saw lower peaks and lower troughs formed. And therefore I took a third off the table here, I would say, okay, that makes sense to me. And maybe ironically you would have done it on that tape at close, but there, I wouldn't have acted upon it. The more I look at this, the more I can't see a reason not to be 2/3 at this stage. This is compulsory. Minus 1/3 here equals minus 1/3 due to round number. It's coming, there it is. Okay, let's go to the final offline request, and then we're going to do your onlines. ACF, what's the time? I'm going to pick up the pace. I ran this yesterday. It looks great. Oh, look, nice, look like great. It's still very sideways. It looked very good. Let me say that. It looked very good. Certainly enough to get on the list. Today's a bad candle on a bad day, but not as bad as any of the other ones we've seen. So I still think this is fine. Happy to run a full risk position on this. Obviously not adding on today's candle because there's no need, but happy with that. Okay, last time we looked at it, it was probably here, and I said it was 5.5 out of 10. Since then, look, it's started to push up at that big white candle there. Got me into it. What I say into it, I put it on the short list. Before I go to the online requests, I did have a question from Blair. Sorry, Blair, this was before the break. I forgot to do it in our last session, but I want everybody's questions to be answered. Blair says, consider that a chart is looking great with its trend, price action and candles all indicating demand side control. So chart looks fantastic, clear demand side control. It's on Carl's shortlist. Yet when placing a trade, the market depth shows more sellers and sell orders than buys, sometimes many more. This would seem to indicate the supply side is in control. What could explain this apparent contradiction, and should it influence Blair's decision? So we've got a great looking chart. We go to trade it. We look at the market depth, and the market depth is completely opposite of what the chart's showing. So there's your mistake, Blair. You looked at the market depth. Look at the chart, not the market depth. The chart is real. The chart is what's traded. The chart is money that is transacted with shares. The chart is commerce, economics happening and occurring. The market depth is bullshit, complete and utter fiction. It is an illusion made up by funds and fund managers and potentially individual investors who don't actually want to trade. That's why they've got orders on the screen at places that aren't where shares are changing hands. What else could it mean? Those orders are by definition where they don't want to trade, not where they do want to trade. If they wanted to trade, they trade now. Oh, but Carl, no, please stop looking at the market depth screen, Blair. You're wasting your time. Look at the chart, make your decision, and go and bloody well trade it. Hopefully that answers your question. Linda's saying, hi Carl, I'm looking for a trading platform that could provide relative strength comparison, not the relative strength indicator. Would you be able to recommend any? It's a little bit tricky because my relative strength comparative, which is I think, Linda, what you're referring to, it's that down here, and it's very handy for me. I do look at it and I like to know which stocks are outperforming the market index, because Acrow is a good example. We could have a stock that's doing very well on the chart, but the market's been going gangbusters. Market's up 20% in the last week, and this is up 15%. Of course it's going to look great, it's up 15%, but it hasn't beaten the market. That's a problem for me, So that relative strength comparative compares the performance of the stock in question with the index to tell us not only, the chart will tell us it's fantastic, but the relative strength comparative tells us it's also better than the market. It's one of the group of stocks that fund managers are favouring over others, and that's really where we want to be operating with the stocks in our portfolio. So I do feel it's important. I do believe it's an independent piece of information apart from trend and price action and candles, and any extra independent information you can have to verify your decision, I think is a good thing. Volume, volatility, these are also, volume is certainly independent, volatility semi-independent. So yes, there's some value in it. This is a custom indicator. I made it. There are other indicators out there. I've looked into how they're calculated, and I never really gelled with the way they do it. I felt there was a better way to do it, and that's the way I do it. Now, so you can't get mine anywhere, but what I might be able to do, and I don't know if the Pine script, some of you are probably picking up on this and maybe already know where I'm going, and hopefully it's making you a little bit excited. If I can figure out how to do the Pine script for my relative strength comparative indicator, I will put it into TradingView for you, and much like I've given you access to these trend ribbons, I will also give you access to my relative strength comparative indicator. Okay, so I'll send out an email, or what will I do? Or you'll send me an email. Anyway, we'll figure it out, and you'll have to send me your TradingView username again, and then I'll have to add you manually, each and every one of you. Okay, but let's leave it with me as homework. It's February 2025. I guarantee before the end of the year I will have an answer for you. But I will look into it, but no guarantees whether the Pine script can work. So those are the two, not stock related, but certainly trading related. I think there's value in doing those. If you have those types of questions, please ask them. Okay, we are going back to here. And if you don't have your request in, please don't put any in, because we do have to end this at some stage tonight. Hey, Carl, good to see you. But no, oh yes, Ben's got something here. MFG and FMG. Well, that's interesting. What a coincidence. FMG and MFG. FMG first. As you know, it's been popping up on occasion in my downtrends list. Occasionally for a feature. I've been a bit reluctant to run it as a feature. Look, it makes the general list, but I haven't run it as a feature because ultimately it's going very sideways. I mean, this is still very sideways, a slight downtrend, and we've still got this dominant trough here that really doesn't look like it's going to get challenged anytime soon. So you couldn't go long, obviously, because we've got the dark pink ribbon there, so we'll take that off the table. As for shorting it, if that's what you're asking, Ben, I wonder, because you didn't tell me whether you want to go short it. Look, I don't mind. I think there are better shorts out there, let me say that. And any of those other ones I showed you, I think, are going to be an easier path to short side protection. And really that's all I'm looking at shorts now, is just protecting my longs than Fortescue. I think that's a really tricky one to go short, and it's certainly not a long for me. Now, you can do whatever you like. You must, hey, Carl, it's got a great yield. I say, okay, fine, no worries. Let's go to your other one, which is MFG, which was looking amazing. Heartbreaking, this one. My heart is broken. It was one of the best looking charts out there, and this is if we talked about species eating events. In fact, we actually saw one in December, didn't we? We said minus a third automatically then. Now, you would have probably put it back in here and here and here, if not there. But that is a species eating event. You don't come back from that. When you see that, if you wanted to do something as strong as, ZRP, ZRP, zero risk position on that, I'm absolutely on board with it. I think at least minus 2/3. Okay, do not pass go, do not collect $200, and they're your only options, aren't they? Zero risk position or at least 2/3, and then this really is a final third if you hadn't done it, and you are not in today. So that's the good news. The bad news is you got whacked on one of those trades. If you're asking me this on the basis that you're still in, I question why you didn't respond to what the market was telling you, because the market grabbed you by the shoulders with that giant black candle and then shook you and told you what it was intending to do to you. And if you didn't do it, then I've got to question why, but that's how I would have traded it. Let me do Solana and Bitcoin later on after today's shit show. He says it was a bit of a shit show today. Adonis saying, he's got some US ones, we'll do those in a second. Oh, and he's got an Aussie one, SUN, nearly missed it. Look, again, a bad candle on a bad day. It's disappointing. Like MFG, it was just a wonderful looking trend prior to today. It still is Adonis. I've got no issues with it. What a great juxtaposition. Very fortunate that I can go between the last chart there, which is MFG, and see that what is clearly a species eating event after a wonderful trend, and go to Suncorp and see what is clearly not a species eating event. It's a smaller candle, even if you paint the gap black, and you should paint the gap black. And by that I mean this bit here. Think of that as a black candle. It's still not big enough. And it's saved by the lower shadow at a logical point of demand, which is the short-term uptrend ribbon. So I'm okay with this one. It's a bad candle on a bad day. I'm still happy to go FRP. Obviously, I'm not going to add to the trade because that last candle doesn't warrant it. Happy New Year. I'm pretty sure that's what Adonis means there, not HNY as a ticker, because there isn't one. Let's go to Avant, who's got Sonic Healthcare, which was, again, just starting to look good. It's got a little bit caught up with today's pullback. I still think it's okay. I'd be more inclined to bail out of this one much quicker than, say, a Suncorp, because Suncorp had an amazing chart. This is more of a turnaround play, and even then it's really just struggling. It's one of those warm ones, not a hot one. Prior to that, yes, it's a turnaround play. It's a setup. The setup was valid, but it's not knocking my socks off by any stretch of the imagination. It's a warm one, not a hot one. So happy to go FRP at this point in time if you have it. If you don't have it, then there's no reason to do anything with it. That's what I believe. Let's go to Appen, which has been all over the show, hasn't it? I don't think you need to be in Appen at this point in time. I think really this candle here was your exit, and then you're probably pretty glad. I know as much as you might have been nervous on this day with a bit of FOMO, I don't think you need to do a whole lot with it. And I say this is the last exit here because you had so many confirmation candles. This candle here in particular, I can't see how you could hold any risk after that one. Like that is a trend killer, that one. So zero risk position from there. Let's say officially from there. I don't think you need to do anything. I think that's it. I think let it do what it's got to do. If it starts to look good again, higher peaks, higher troughs, predominance white candles. I want to see lots of downward pointing shadows here to show me that supply that is so clearly in the market. If you can't see the supply there, you need to tune your eyes or retune your eyes. But that supply is being absorbed. So this is largely about supply side control, I think. But there's still an active demand side. We can see the demand side is active, and we're having these two very active, very motivated sides of the market smacking into each other, creating these wild candles. And it's just a place I don't want to be as a result, because we don't have consensus. We want to trade when there is market consensus. Think about that. Consensus is all white candles. Consensus is beautiful, clean price action and trends. That's consensus. Everyone agrees the demand side wants to be in, and the supply side wants to be in. That is consensus. What is consensus? That's consensus. Pro Medicus. Everybody wants to be in. Okay. What's also consensus? We looked at something like that. That's also consensus. Everyone wants to be out. We want to trade with consensus. We don't want to trade with that, because that's indecision. Okay. Always frame your trades along those lines. Consensus or indecision. You want the most consensus and the least indecision. If that's the takeaway point for tonight, then so be it. COF, consensus or indecision. I would say largely indecision. Certainly there's a supply side skew to that. You might be considering shorts. I don't mind, but I think there are better shorts out there. I think that's still indecision. That's Advance 3. Let's keep going to BB1. Okay, I haven't heard of that one. It looks interesting, doesn't it? King, yes, King's one. Today's upper shadow is disappointing, but it's still a good day on a bad day. So it looked very interesting. Today's volume off the chart. I can't do anything with it today because of the upper shadow, but it's got my attention. Okay, so next strong demand side candle, next high close. Yeah, I'm very interested in here. I like these ones that don't have a lot of history because there's not so many hang-ups in the market. There's not people waiting from 2 years ago to get out. There's still some people waiting for 40 cents though to get out. So let's take this one with a little bit of caution. I don't think we're going to put the house on it. But yeah, look, next high close. Next strong demand side candle. That's what we're waiting for here. It's got my interest. It's got my attention. No announcement, says King. I don't care, King. Advance saying scratch COF. That was a typo, and that's okay. It was good because we got to compare it to some of the decisive or consensus style stocks. Rapama, I'll get to your US stocks in a second. Moving down the list, I'll try not to miss anybody's. That's the important thing. OPT for Jackie, another great success story. You might have taken some off the table, Jackie, at $1. I wouldn't mind that. You might have added it back on Friday. And today's a bad candle on a bad day. The pedigree here is so good. But that's a nasty candle, isn't it? I'm going to say it's not enough to push me out of a trade just yet. If you're at 2/3, stay there. If you're at full risk position and you didn't if you're at full risk position and you didn't take the 1/3 off the table for $1, maybe you'll feel more comfortable doing it now, right? Because you've got a reason to do it. You don't do it for no reason. There's a candle there, and $1 is no doubt still at play in the market. If you are at 2/3, I think that's where you're going to stay. Okay, so depending on where you're at is what you do. Happy to run with the risk that we've got if we're 2/3. Hopefully that made sense. PGC is fine. Today's candle doesn't look fantastic, but hey, it wasn't a great day. The trends there are fine. There's nothing to see here, nothing to worry about. I know it looks like an ugly candle, but there are a lot of ugly candles today, far uglier than that one. Okay, so I'm not too stressed out about that. Full risk position. Don't think we need to do anything there yet, but obviously watching for confirmation. Nothing to do here at all from Housel. So very lucky today, Housel. You give yourself a little pat on the back for this one because you pretty much dodged the bullet. We're getting a little bit close to $3 though, so you might want to consider taking a little bit off the table up there. Only a third, no more than that, and sticking with everything else that you got. Other than that, there's really nothing else to do here but FRP because it's boring, and boring is beautiful. Let's go to MVP. Oh, well, there you go. I mean, this was the buy signal here, that big white candle. If you put a little bit on it today, I think stick with it. I mean, today's candle, again, not ideal because of the upper shadow, but still fine in the context of what else happened today. So, yeah, you're going to see where this one's going. That's all it is. We're not going to add risk today, obviously, because of the shadow, but otherwise happy to run FRP, everything we've got at this stage. Well, on the last candle there, let me move that because really that one belongs there. Let's go to Dubber. Yeah, Joel, this is one that for a long time I kind of ignored it. But then it got to the point where I really couldn't ignore it anymore on that candle as a turnaround play. And I say I ignored it because, let's just say this is the worst stock on the ASX that's still on the ASX because it's a bit of a miracle that it is. And if you know anything about Dubber, you'll know about the problems they had with, millions of dollars just going missing thanks to the CEO or whatever it was. And then, I've seen them also just misreporting, by weeks. So I don't know how they do it, but they're still there. But again, that's fundamentals. So on that candle there, I'm a true believer. And then we got this. So hasn't worked out at this point. It's sown substantial doubt in my mind because maybe the leopard isn't changing its spots. But I mean, compared to here, like I felt compelled. Like it's so much better than what it was there. It's above the long-term trend ribbon. It's using it as a demand point, whereas here it never used it as a demand point, did it? White candles, and that's going to happen, unfortunately. The market is going to push you into doing something because you are compelled, because it's a setup, and then it kind of reminds you why you shouldn't have done it. And look, I don't expect you to know the background, Joel. I don't. And all you care about, right now, honestly, is just what to do with it. But I think we're going to give it a little bit more time. But we're close to not giving it much more time. And I think that shadow there is a good point to peg it, and a close beneath that. And I'll give you a number. That low there is 004. So I would say a close at 0038 or worse. And I don't think you can give it any more room, because the risk is it does this again. Okay, and this might have been, because it tends to look good just before they announce something really bad. So that might have been the impropriety is that the word, of the CEO, whatever it was. Just took millions of dollars and never gave it back. And then they did all sorts of capital raises down here. Huge amounts of scrip being thrown out there for next to nothing, heavily discounted. We've talked too long about Dubber. I've given you my opinion and some of the rationale as to why it made the list. Apologies if you're unfortunate enough, Joel, to get on it. Sorry. Matthew, some US ones we'll do in a second. Francine asking for BSL, and we'll do that one, yes. Very sideways. We talked about indecision. We talked about some of the stocks which I haven't traded very well this year, and this is one of them. I haven't had that many trades, or it hasn't been in the list very often. but the times it was in the list, long or short, it was invariably wrong very quickly. And that's a great red flag, if not a learning tool, a teaching tool for you. If you have a stock like that does this to you repeatedly, stop trading it. This is like, why do we want to do this? This is not where we want to be. Give me one good reason. I challenge you, Francine, to tell me, Carl, this is the compelling reason why we should be looking at BSL right now, long or short, because I actually can't tell because it's halfway. Is that consensus, or is that the epitome of indecision? I put to you it's indecision. VBTC, which might be up here. Let's try it again. VBTC, which is the Bitcoin Trust, was looking great, partly because the Aussie dollar keeps coming off, and I'm guessing this is priced in US dollars, so part of it is a currency move here. Always be aware that is a possibility on these ETFs that are trading US denominated assets. Okay, so you might, the chart could be lying to you, because it's not telling you necessarily about the underlying strength of the asset itself. It's telling you about a currency translation and the weakening of the Aussie dollar, which could be completely at odds with the what's driving the demand supply demand dynamics for the underlying asset. Anyway, last night Bitcoin came off, and the Aussie dollar came off too, ironically, but I guess not enough to change that. The trends before were fine. If you're on it, you've got. If you're on it, then you should have been on it. There's every reason for you to be on it up until this point. We've had some news come out. Really, news is Trump tariffs. What has that got to do with Bitcoin? It's just risk on, risk off. This is a risk on asset. When markets are risk seeking, Bitcoin goes up. When markets take a sharp lurch towards risk aversion, Bitcoin goes down. And because it is such a leveraged asset, such a high beta asset to risk, it goes down substantially, it goes down quickly. So I totally agree that at the light blue line, there was every reason to be long, and you got pegged, got tagged by a news announcement. You have to decide what to do now. It's a big candle, it's a black candle. I don't think it warrants a full risk position at this stage, so knocking a third off the table and then waiting for confirmation is what I would do. But you've got to make your own call about that. Some people have different feelings about Bitcoin. It's tough. I mean, I think if you want to own Bitcoin maybe, rather than this ETF. Although, they say, is this the one that's backed by actual Bitcoin? Maybe it is. I can't recall. I'm sorry. I don't know them all. We'll do that one in a sec. Matt, BC8, which it still looks okay. I mean, I think plus 2/3 risk position here. There are no really obvious points of demand to peg. It's beneath the short-term trend ribbon. That's not good, and it's printed a nasty candle. So I can't see any path to a full risk position here. Where does the next third go? I don't know. This should be a point of demand here. So a black candle full black candle close beneath here. I think so. We'll go. What should we say? Low close less than this level, minus 1/3. And let's keep moving, so I need to finish. Thanks once again, Carl. Realise it's getting late. It is getting late. PAR. A bad candle on a bad day. It's not a good candle. So many of these. Like I could have restarted these webinars any other night, because I've got great trends and I've got nasty candles that in isolation, if we looked at that, we would consider taking some risk off the table. Everything up to that is perfect for a turnaround setup. I know there's potentially some latent supply at this level. I know it. And you go into these things eyes wide open, right? And looking at this candle, it's telling you that, we're not too worried about that, right? I mean, the supply isn't manifesting itself. And you can say, I told you so, supply was going to be there. Sure, but you needed some really bad stuff to happen in the markets to make that supply manifest itself. So, I think that's more luck than anything. Look, on that basis, I'm going to give it the benefit of the doubt. I'm going to wait for confirmation. I'm going to stick with FRP, but it's a very tenuous grip on that FRP just at this stage. And look, I don't make the candles, and I can only do my best to interpret them. I'm sorry if it's not as decisive as you'd prefer. And David giving us some idea of the complications there with his analysis as well, saying it presumes we wait for confirmation. We both came to the same conclusion, didn't we? CAR is fine, but I was going to say that candle's not as bad, but if you paint the gap black, it's just as bad, isn't it? It's still okay, it's still holding trend. Again, waiting for confirmation. I still think we're okay here, so let's go FRP. I think compared to many of the other ones, David, probably not as bad as some of the other ones. So maybe I won't say dodging a bullet, because it still feels pretty lousy, but Ben's saying he's not in MFG or FMG potentially. Okay, going back up the list, they are the Aussie stocks done. We're going to whip through the US ones now, mindful that we're getting quite late, so I won't go more than 10 minutes on these. So bear with me if it's past bedtime. That is where I want to be. Let's head over here, and we're going to start at the bottom and work our way up. Jackie's saying she sold half of OPT and she's keeping PCG. Makes sense to me. Okay, US stocks G. Let's go there. Let's go stocks and Genpact. I'm guessing that one is there, Perry. Yes, good guess, Carl, because Perry only deals in charts that look like this. Let us zoom out using the weekly chart to see if there's anything that we need to be right about, any major points of supply. Look, there are some points of supply, and there's actually some in reasonable proximity. I'm not worried about those ones anymore. I think they're there because of $50, and I think on a weekly chart, that candle Friday's close is telling you that $50 is known and it's not a problem. Okay, I don't know what's going to happen tonight. Obviously, futures are down. Dow futures are down 700 points, right? Nasdaq futures down 1.5. So I don't know what's going to happen tonight. All I know is what happened on Friday, and then we've got 54. But I don't think that's going to be a major problem in terms of risk reward or making risk reward work, because we're only at 48, right? So from what I can see, and again, I can't tell the future, FRP, if you don't have it, I can't see why you wouldn't go plus 1/3. If you want to wait to the end of today's candle before you did it, that might be one way to just be sure that the requisite demand side control is there. I'm going to click save, so it's there for next time. Let's go to HIMS, which is Hims and Hers Health. And this one is for Matt. Crazy town on Celestica. Rupam's got it, so we'll do it when Rupam's got it. Great looking chart. Can't fault it again. Let's go back to the weekly chart, even better. Blue sky. So there's nothing holding this back. Very strong for me. Very happy to have some skin in the game here. Volume confirming, volatility confirming, good trends, good price action, good candles, and I can't find a single reason not to do it. So FRP or plus 1/3 if you prefer. If you're looking to add risk in the US, that is. Let's go to WRBY for Matt. That's not what we want to do. Let's go yep. That's where we want to be. Warby Parker, again, very good. Friday candle, unlike the last two, actually seeing a little bit of a pullback there. Let's go to the weekly chart. And look, there is a little bit of supply sort of lurking between that 36 and 37 level. And I think it's relevant. But I also think it's far enough away for us not to have to worry about it in terms of making at least a 1-to-1 reward risk, which is our minimum hurdle. Friday's candle, just it's black, it's full, it's closer on the low. Means we don't have to add risk on tonight's candle. We're just waiting for the next high close. But everything else is there, so that's fine. It's just one that goes on the watch list. But next high close, plus 1/3 on that one. But I personally would prefer to wait on it. Let's go to OPFI, OPFI, a little bit like that last one. If you're on, I should say, if you're on those ones, and maybe that's why Matthew's asking about these, he probably has them. So staying the course on that one. There is an earnings call tonight after close, potentially on Palantir. So stay the course. So there's certainly, on the last one, nothing in that Friday candle to suggest we need to do anything but hold. There's certainly a little bit more supply coming here, and I wonder if this is the first time it's been at 15. 15's not a major round number, but it can have, like literally exactly that much influence. Like 20 is, I would classify 20 as a round number, but 15 can have literally that much influence. Just people who got in it, guess where? They got it at 10, they're taking profits. Or, as I tell you so many times, if you see things sort of hover, around half the round number, it's more likely that a round number is going to come in play. So where's this hovered? It's hovered between sort of 7 and 8, right? Around 750. I mean, that's the midpoint of that range. So lots of traders got in at 750, which means lots of traders are doubling their money at 15, okay? That's probably causing these last few candles. It doesn't look sinister at all. I mean, as black and upper shadows they are, they didn't really make much progress into the demand side, did they? So I still think very good. Happy to hold. Obviously not adding any risk because we've got 3 black candles in a row with some upper shadows and we're at a bit of a round number. But certainly FRP, no reason to do anything. Happy to add risk on the next big white candle that's pushing into 15. Let's go to Palantir. Yes, very interesting. Obviously, the artificial intelligence company. It's seen potentially as one of the beneficiaries of this sort of DeepSeek fiasco that occurred. Like NVIDIA's making the chips to power these AI applications. These guys are more about those applications themselves. And I don't think the Palantir devs are too worried about DeepSeek, if you get what I mean. These guys they also mean business. And going very well. Earnings call tonight. Anything could happen, but I can only talk to you about what I can see. And what I can see is, a very strong demand side market, and therefore the weekly charts exemplary. There's every chance that the earnings call goes well, I hope, for you tonight, Matt, and it's trading at $100. Okay, because that's the next logical target. And often we find with the US stocks in the high 80s, there's a supply vacuum because people don't want to sell for $88. They don't want to sell for $93. They want to sell for $100. And you can often get that supply vacuum if the demand's still there. And there's every reason why it should still be there on this one. I can't advocate adding any risk on that last candle because of the upper shadow. There's no need to, but I can certainly say FRP and go so far as to say next high close adding a third because everything else is definitely in place on that one. So let's go up the list again to... Oh, I don't think I did Yancoal for you, John, but you'll be happy to note that Yancoal is in... it was in the shortlist. I think I shortlisted the shortlist and I got rid of... Okay, let me go back here and I can prove it to you. So I'll go here. I hope I can prove it to you. I can prove it to you. There you go. So Yancoal was on the list, the shortlist today for longs, John. And the reason is a few good white candles in a row. It's holding the long-term trend ribbon. Trend ribbon's active as recent demand. Short-term's turning up. It didn't make the feature list. It's not strong enough. Nowhere near strong enough for the feature list. Would I trade this with my own money? No, I don't think it's up there with the consensus trades, but it has met the criteria. It's more of a cheeky 1/3. It's more of an exploratory 1/3. That's the way I would look at this. Just getting a little bit of a toe in the water, just in case it starts to run. And understanding it's early and understanding it's a higher risk trade because it's a turnaround rather than one of those continuation setups. I know you missed your ASB, so let's quickly do that. And it's one also that has done very well. Today's candle, nothing sinister at all. I know it's getting a bit close to 4. I would personally look to take some risk off the table at 4. It didn't get close enough to it today, but otherwise that is a bad candle on a bad day, and it's one of the least worst bad candles that we've seen. So very much happy to stay the course on that one. Let's get back to the US stocks. You've got to know when to hold them in the US last week. Game on. I still think it's game on in the US. I don't think we haven't seen the last of the bull market yet. There's no way Trump's going to let this bull market slide, is he? Carvana, again, if you've got it, because that's, I think, the only reason why we're asking about it. I think, you'd be happy to hold it. There's a big point of supply up here. I want to see more evidence close to that point of supply that demand is not worried about it, that supply is not actually actively targeting that area before I was to add risk. And it would take, a nice high close into that zone, and I'm happy to write that on there for me to add risk. So look, if you've got it, FRP. If you don't got it, next high close, let's go into point of supply, would get me to act plus 1/3, but not until then. I still think there's some work that needs to be done. Okay, just trying to make sure I don't miss anybody's requests here. Thank you, Rupam, for that one. James has got NVDA, obviously a fascinating trade at the moment. Was looking okay before, obviously, the DeepSeek news. Would you have been a full risk position before that? Look, if you had it, I think you would have been. I don't think I would have been actively looking to add risk just yet because of this big point of supply up here. So just caution until we got a lot closer into that zone. 150 probably having a bit of an impact. That's ancient history. This big gap down, that candle there. I'm going to go, because you need to paint this black. You need to paint this bit black in your mind, okay? Because it is black. It is supply. The gap looks white, but that's deceiving, okay? That is a gap of demand. That is a vacuum of demand and motivated supply not hitting any buy orders, not hitting any bids for all of this zone on one of the world's biggest stocks, if not the world's biggest stock now. No bids, no bids, no bids. Just say that in your mind. No bids, no bids, no bids, no bids, no bids, no bids, no bids. Some bids. That's where it opened, okay? And then it's come down. It's tried to go back up, right? And then it found sells again and settled there. I think that's a species-ending event. 100% I'd be exiting a third on that candle. Sorry, that's not true. I think minimum 2/3 on that candle. Minimum 2/3 on that candle. Minimum minus 2/3 on that candle. And just waiting for confirmation for the last third, because some people probably love their NVIDIA and don't want to sell it. Minus 2/3, not sure why that disappeared on me. And I think it's underneath. I think it's there. Yeah, there you go. It's underneath the green zone. That is crazy. Okay, so we need to right click on that, go visual order, bring to front. One of the quirks of TradingView. I knew I typed it in. So minimum minus 2/3 there. At most, we've got a third. And looking at that candle there, I reckon that confirms it for me. So I reckon that Friday's candle is the minus the third. Let's just call it ZRP. So NVIDIA, officially me, ladies and gentlemen, if you're wondering, I am ZRP on NVIDIA. I don't feel there's a reason to have any risk on this particular stock. Hey, you do what you got to do. James would like to hear my thoughts on NVIDIA. Maybe he doesn't want to hear them by the end of that. Yes, I've got the change on that one, Rupam, and your other two, APP, AppLovin. Oh gosh, we are way over time, but we're not far from the top. FRP, if you've got it, not adding risk on the basis that the last two candles do not warrant it. We're in the shadow of $400, but I can see why you would have been on it up to this point. 100%, yes, looks good, and nothing in there to tell us that we shouldn't continue to hold a full risk position. Let's go to, I lost your other one there, CLS, which is Celestica. And this is the other one I think Matt was looking at. Oh, that's a wild ride. I'm guessing that was earnings. And this here, I tell you right here, this I would have gone minus 2/3 on that candle. As a do not pass go, do not collect $200. So you can see that, because look at the volume. I mean, that was decisive. Through 100 as well, through the short-term trend ribbon, through that point of demand, through that point of demand, gap, black candle, 100%. At minimum minus 2/3, probably all out on this candle here. And then just scratching my head as to how the markets work sometimes at this level here. That big shadow there, I'm not so sure about this one. I don't think you can run a full risk position. If you did nothing on that day, I question why you did nothing, because I can only see that as a decisive call to action. So maybe the market is blessing you with an opportunity to take some off the table. I'm going to say at most I'm plus two-thirds RP here, okay? And I'll let you figure out what you need to do. What a chart. Amazing stuff. And hey, anything's possible in the markets. That's why they are so much fun. Let's go to Qualcomm QCOM. Looks okay. It looks a bit like Sonic Healthcare. If you had it, I wouldn't complain. But I think you understand that it's a long and complicated journey on what is a complicated beast. If you don't have it, I would question why you are so interested in this one over something that is showing stronger trends, stronger price action, and stronger candles, and has less overhead potential points of supply to contend with. Okay, not the worst one I've seen at Donna's, but it's far from the best, and that's what concerns me on that one. Adobe looking for a short trade? Yeah, potentially. I think there are going to be better shorts out there. I think any of that short list of Aussie shorts, if you want some Aussie exposure, I think I would put ahead of this one. This is a pretty decent rally through here, and it signals there's some demand in the system. I'm not sure if I want to mess with them. And Friday's candle is not decisive enough for me to come back in on the short side here. But if you're in there, I can see a path to staying the course. If you're not in there, I'd be looking for stronger short side setups than that one. Okay, CRM, because I need to get to the end of this webinar. Toot sweet, good, happy to hold. Disappointing pullback from a clear point of supply. That shadow there gave you a bit of an indication. Look, none of these in themselves are species-ending events. Happy to run with a full risk position, but obviously not wanting to see confirmation of this existing move, and that would look something along the lines of a move that sort of did this and then started to sort of do that. Okay, I'd be looking to reduce my risk on that trade. I'm at the top. I'm pretty sure I got everybody's. I'll give you, just 10 seconds quickly, jot down only if I miss something. Please don't put anything new, because that's ridiculous at this late stage of the evening. But I hate to leave without. You've waited so long to ask your questions. I'd hate to leave without somebody not getting their question answered. And I'm guessing GGP. I don't think it's that one, so it must be an Aussie one there. Let's go back to here and quickly try and do GGP for... it is in London. Okay, let's go. I might have missed that one in your email there, Peter. Okay, let's do this one. Oh, looks good. I like it. Yeah, look, it looks very interesting. Volume's a bit subdued though, isn't it, Pete? I mean, when you look at a setup like that, you kind of automatically expect to see more volume on that move, a bit more of a push, a bit more of supply side removal, because there's plenty of supply in the market that we've got to contend with. Look, that's only a minor criticism. Look, I do like it. I think this is a wonderful candle. I like this strong move up here, very shallow pullback. The trend ribbon's now acting as dynamic demand. Good price action, great candles. A little bit of a supply point there. We're certainly through that one, and I think we're through this one. I don't think it's too fussed about that. I'd happily add some risk here. It's an exploratory trade. It's a little bit of a specky, but I think it deserves a little bit of risk on this one. We don't know. Who knows what's going to happen tonight on this. In fact, that's probably already trading. In fact, it is trading. So that's happening today, despite all of the chaos around the place. Now, the other thing, Pete, you need to think about is that is a live candle. So we can't actually do anything with it. Okay, we don't often look at live candles in these sessions because the US isn't trading, the Aussie's not trading. So this one's a live candle. So for me, I have to wait. And if it looks like that at the close, then I have to do something. If it's changed, the analysis may well change. And I'm on the wrong screen, obviously, because I went to Amy Broker and then Pete confirmed that it was actually a London stock, and I had to go back and I forgot to change the screen this late in proceedings, ladies and gentlemen. But Pete, you know exactly what I'm talking about now that you can see that, and you already knew what it looked like anyway. So let us then head back to here and finish by reminding everybody that everything we discussed tonight is general information. It has not taken into account your personal financial circumstances, objectives or particular needs before acting upon this information. Consider it carefully or seek the help of a financial professional. Trading is risky. You could lose money. You probably lost some money today. I'm very sorry about that, but that is the reality of markets. And what we're doing here is learning how to deal with those losses, how to minimise those losses, and how to move on to find our winners. Ultimately, it's you and not I who's responsible for everything you choose to do. Ladies and gentlemen, it has been a pleasure chatting with you this evening as the poster says, keep calm and follow the trend until we catch up again. All the best for your trading. Bye-bye for now.